And do you want fries with that? Hello, fellow traders everywhere. Adam Hewison here, co-founder of MarketClub with your midday market update for Thursday, the 8th of March. Do you want fries with that? McDonald misses big and the stock drops sharply. We'll be looking at that with our trade triangle technology and see if we got this one right or wrong. Also, is $1,700 the new resistance for gold? And also, 3 stocks on the move, Sprint, Coach, and Lennar. We'll be looking at all those markets with our trade triangle technology, of course, but we also have all the sectors in the plus column today. Amazing how that works, isn't it? Now let's go to the markets using our trade triangle technology and analyze what's going on. So first of all, I don't know if you're going to have a chance to come and visit us for our Market Club Investor Summit that's going to be out in Salt Lake City at the end of this month on the 27th and the 30th. We'd love to see you come out and visit with us. You can give us a call toll-free at 877-219-1482. That's extension 10234. And if you're calling overseas, if you're watching this from overseas, the number is 1-801-341-3981, extension 10234. We'd love to have you come out. I'll be out there with some other experts, and we'll be talking about the markets, of course, and analyzing those markets and helping you become a better investor. So be sure to join us. So now let's go to the markets and see what's going on. Well, first of all, our S&P 500 is still plus 60, meaning it's a trading range. Now, we have had a rally today. Obviously, we're up quite a bit, but we're also, if you look at this closely, I'm going to get this very closely, and you can see going from our Fibonacci number from the highs down to the lows, we pull back to a Fibonacci number, pretty much a little bit over a Fibonacci number, which is not unusual, but depending where we close today, of course. But this is still not out of the woods. This one day we had here is still a very big negative in my mind. And our trade triangles are plus 60, and I have to respect that. Longer-term traders should still be long stocks, but intermediate-term traders should be out of this market at the moment. So let's see how this market plays out. We are, if you look at this market, still lower for the week, which is not necessarily a good sign or a bad sign, but it's just a fact of life right now. So let's go to our next market. I'm going to bypass the Dow and the NASDAQ, which are pretty much the same patterns there, plus 60, plus minus 60, plus 60, and go to silver, which is a little more interesting right now, which is also in the 60 column. And if you're looking at the silver, you can see that we've had the engulfing line here. We talked about this negative engulfing line, which was right here. And then we had the confirm right here, and then we've had basically a few more days down. And then we just had a little recovery here. But nonetheless, it looks to us this market can still go lower. And this area here, around a little bit over the 34, maybe the 34.20 area is now a resistance area for this market. You can see our 32.62 is our weekly, and our monthly is still long, so it gives you that discrepancy of the 60, meaning it's a trading range right now. So that's what you have to look at for silver, trading range, and I think that's probably going to stay in place for a little while. But looking at the next market, which is the big market, of course, and that's gold, let's take a look at that market and see what we have there. Now, that's a different score. We're there on gold, we're minus 100. And that on minus 90 right now, it's just changed. But generally speaking, you had the big negative engulfing line right here. This one area here engulfed the previous line. You had the confirmation line, of course, right here. And then you've had several days down. This is the first recovery we've seen. But it seems to me the 1700 level, so 1705, let's say, is an area this market's going to have problems with. I still think we can go down and test the 1620 level on gold. So let's see how that plays out. But nonetheless, the trend is clearly down. The market's lower for the week. We still have one more day left, Friday, of course, but I'm be surprised to see gold close higher for the week. Let me just put it that way. So let's clear the screen, go to our next market. The next market we're going to be looking at is going to be the copper market. Now, copper is up today, not a lot, about 0.6%. It's minus 70 still. We've got those little negatives going on there. It still has very strong support around the 370 level, which is this level here. But nonetheless, we look as though we are seeing this market really sort of try to regroup to go higher. We're still bullish on the market, but longer term with our green trade triangle, monthly green trade triangle, but short term intermediate term looks to be a little bit sloppy. So let's move on to our next market, and that's going to be crude oil. Crude oil is up today, 106.90. However, the 107 level could be a real problem for this market, and let's take a look at that market right now. So it's plus 85. As you know, we're still very bullish on this market. I'm going to get a little more information on it. So there you have it. It's a plus 85, the weekly and the monthly, still positive, indicating higher levels. We're still looking for this market to go to the 125 level. And I think that providing we sort of stabilize around this area here, the 104, 105 area, I think we're still good, because I think we're looking for this market to really, there was the breakout right there, and we're looking for this market to really take off to the upside, and we've got a 120 to 125 target zone. Now, I would say what would concern me is if we were to take out this low right here, and that would change this whole pattern, and it also would break a long-term trend line coming from these area up here. So I think that's something I really want to be very careful of and cognizant of. So let's see what happens in this market. But for the week, if we just clear the screen and go back to our markets and see, let's scope this in a little closer, 3 months, and we can see that we actually still a little bit lower for the week, and we could see, I think we closed last week at 106.95. We're 106.93, so almost flat for the week, if that's any indication. But that's not a bad sign. It tells you there's a tremendous strength under this market, so really pay attention to the crude oil market. So let's go to our next market, and let's take a look at the euro dollar, which actually I'm going to miss the index this week. I want to just look at the euro dollar because this has really had a huge move up today, and very similar to these moves, boom. And it looks like if you scope this out, we had a question on our weekend show, or excuse me, our daily show yesterday about a head and shoulders formation building here. And of course, we talked about that on the show, and this is the key area that we're looking at, which is right around these levels right here. It kind of gives you that base looking feeling, which let me just get this on the screen so I can share this with you, which I'm looking at. So let's just go up here and get our little illustrator tool, but basically this is what we're looking at, this sort of base that we're building here. It looks like it just wants to, and I think I draw the line not quite perfectly the way I wanted to draw it, but it was right around there. But if we close over those lines, over this highs, and this is around the 135 level in the euro, then I think we're off to the races. I think we'll see this market quite clearly go from test the 142, the 144 level. That would be the test zone, I think, for us if we go over those levels. Of course, we still have our monthly trade triangle negative, but our weekly and daily positive. We're indicating mixed results, sort of like an emerging trend to the upside. But if we see the monthly trade triangle go green, then I think you can just get very serious about buying this market, and I think we'll see that move up to these levels. There's still a lot of people who are short this market, and whether they're right or wrong, it's too early to tell, but certainly the action is looking interesting. The fact that we've just come out of this little 3 or 4 day lull, and boom, it's up to the upside. So for some reason, the market seems to want to go higher, but it's not there yet. So let's clear the screen off and start looking at some of the other markets we're talking about, and I think that'll be kind of fun. And looking at these other markets, we've got the Reuters Jeffries Index, which we still feel is inflationary, but it still hasn't, so if we had to turn up, but it really hasn't moved dramatically, and you can see it's just sort of building. Again, we've really got to get over the 325 level, and I think that's a good sign. But nonetheless, our trade triangles are indicating that's going to happen. So this may be a very low-risk buy around the 314, 315 area, with stops below 310. I think that would be a very, very low-risk buy. So let's go to our next market. And we're going to be looking at, I want to refresh this because we're looking at some different stocks right now. We want to look at the markets. We're looking at the markets that are on the move, and that's going to be Sprint, Coach, and Lennar. And his Sprint right now, it's up 5.76%. It's plus 70. And as you can see, this stock is a very inexpensive stock, currently trading around $2.57. But it looks as though it has made a base It hasn't confirmed this with our trade triangles, which are monthly trade triangles, come in at $4.54. So we've actually been very lucky on that move. However, the weekly and the daily are still in place. I think if we were to get this market to move over probably, I would say, the 280 level, then we could look to see that these triangles would all be green. But it's on the move. It's put in a good performance today. You can see today's performance, but it's still not out of the woods yet on this area. But the one thing we do like, what we're seeing here, is the fact it's beginning to make that base. And that's really what you want to see in a stock to push it higher. So let's clear the screen, go to our next market. The next market we're looking at is a pretty well-known brand. It's a brand, I should say. It's Coach. And Coach is plus 100, which is a very strong trend. And you can see we've been long from 66.54. We had a little blip yesterday, on the 6th, I should say. It's 73.35. We're back in the market today once over those highs at 77.36. So this market looks like it wants to go higher. It's put a good performance in. As I say, we've been long from 66 right here. You can see the monthly trade triangle from January 24th, and that's worked out well. So let's go to our next market, and the next market is Lennar, and they're home builders, and we go to plus 100 there. And again, excellent performance. You can see we've been long from 18. The market's currently at 24, so that's about a 30% return. You can see we got long right here on the 8th of November. And again, this gets back to timing and really listening to the market as opposed to what the pundits are saying, because the markets tell you what they want to do. You just have to listen to them. And this, of course, Lennar's put in 2 very strong days here, and we're at new highs. Now, can it go higher? Well, we have to scope this out just a little bit to 5 years, and you can see Lennar was a lot higher, 45, and we're currently a lot lower than this right now. So it looks like, again, another nice big base to push this market higher. And I think if we scope this out to the max, we'll probably get a better idea. So if we just were to put our Fibonacci tool on here, drag that down, we could be looking at $30 to $35 on Lennar without too much of a stretch. So let's see how that plays out. But generally speaking, I think it's a very underestimated segment, and it's looking like it's working very well. Now, the big question is, do you want fries with that? Well, this is McDonald's Corporation, which has been a really great performer up until today. And what I want to share with you is that let's take this off, put our monthly trade trials in, and just put our monthlies in. And you can see we got long really well on McDonald's at 77.59. The market traded well over 100, but it's come down dramatically today, and it's down, well, it's down 3%. Not the end of the world, but it's down 3%. But what it did do, and we'll scope this in closer, is that it basically, we put our weekly trade triangles in, boom. Let's see where we are. There's our weekly trade triangle that came in at 98.68, and now it's 97.04, so it's really about $1.60 higher. But basically, that was the first warning sign that things have changed. So as you're an intermediate term trader, you're out of McDonald's right now on the sidelines, and of course, you would have avoided this move down. And we want to see how this market performs and holds at these levels. As you can see, it's a doji line, meaning the. Let me put this on the screen and share this with you. When you get a situation like this, when you have a line like this and you have a very tight line like that, that's called a doji in Japanese candlestick terms. And it indicates a equilibrium between the buyers and the sellers. So the sellers aren't strong enough to push it any further down, and the buyers aren't strong enough to push it higher. So this may be a very important turning point, because you sometimes get them right here and here, and there's probably some better examples, but they tend to be turning points in the market, and this is probably a closer one as well. So that's what we're looking at right now, but the trend in McDonald's, at least intermediate term, is negative, and short term is negative. Longer term, however, the trend is up, and the trend is your friend. Hey, this is Adam Hewison for MarketClub. I'm very glad you stopped by and had a chance to visit with us today. And I think if we look at the markets, and if you have a chance, as I say, to come out and visit with us in Salt Lake City, we'd love to see you there. And we'll certainly look forward to that moment. So Adam Hewison for MarketClub. Have a great day trading. Take care.